In this video, I'm going to explain to you what could be one of the easiest Forex trading strategies for beginners. And the cool thing about this is it uses two free indicators and one very important candlestick trading pattern. And when you put these together, it forms a seriously powerful trading strategy. So if you're looking for an easy Forex trading strategy that actually works, then in this video, I'm going to do a complete tutorial on exactly how this strategy works, what the different components are of it, and we're going to do a few trading examples together. Now, with that being said, this is not my own trading strategy that I developed. This is a trading strategy that I got from probably one of the best Forex trading books that I read as a beginner when I was first getting started with Forex trading, called the Candlestick Trading Bible. So let's get straight to it and break down exactly how this works. So the first thing is that this strategy will work on most time frames, but it works better on the higher time frames. Generally, I like to trade this strategy on either the daily time frame or the 4-hour time frame. You can also trade it on the 1-hour time frame if you'd like to. However, from what I've seen is the higher the time frame it is, then that usually signals a stronger signal, and you'll generally have more accurate signals trading this strategy. So in this example, I'm just going to pull up Euro US dollar here on the daily time frame. Now, this strategy is designed to be traded in trending markets. So what we're going to do here is slap on two indicators. Both of them are actually going to be moving averages. So I'm going to put two onto my chart. And the first one I'm going to put as a length of 21, and I'll actually make this one yellow like that. And then I'll also change this one to the 100 moving average like this. And the style, I'll go ahead and I'll just make this red color here, for example. Okay, so now that I've got it looking the way that I'd like to, the way that this trading strategy is supposed to be traded is in a trending market. Now, granted, trending markets only happen about 30% of the time, but with that being said, when you can find this sort of setup, it's very, very powerful, like you're going to see. So now that we have the two moving averages, the 21 here in yellow and the 100 here in red, essentially what we're waiting for is we're waiting for a trending market. And you can see here, since we have the yellow 21 moving average underneath the 100 moving average, this is signifying that it's in a downtrend. And so this means that we're only looking to take sell trades here in this scenario. The second thing that we're going to look for is we're going to look for an engulfing bar candlestick pattern. Now, this is one of the most important candlestick patterns in all of Forex trading. And the way that it works is it has a smaller body candle in one direction, and then it has a larger body candle going the opposite direction that completely engulfs the size of the previous candle. Now, the bigger this candle is, generally, this is a stronger sign of strength. So if you just have a smaller candle that still engulfs it, it's not as strong of a signal as a big candle like this, where the body of the candle is actually completely engulfing the previous candle here. Now, with that being said, here's what it'll look like when we're looking for sell trades. For instance, it'll look like, a smaller white candle here, and then we'll see a big black down bearish engulfing looking bar candle right here. Okay, so that's all we're looking for. And again, obviously bullish engulfing bar is just the opposite, right? We have a down candle, then we have an up candle, and in this scenario, we're just looking for a bearish engulfing bar. Okay, so how do we put this together? So the way that we start to put this together, and then I'll talk about risk reward and risk management, because that's really, really important for this strategy. So essentially what we're looking for is we notice that, yes, the market is in a clear downtrend. And what we're waiting for is we're waiting for price to pull back to these moving averages, right? So the way we can think about this, as price moves further and further away from these moving averages, we can think of price being more and more oversold. And I'm sure if I slapped on an RSI or a stochastic, it would say that the market is becoming more and more oversold during this zone. So essentially what we're waiting for is we're waiting for the market to pull back towards these moving averages, okay? And we're looking for that bearish engulfing candle. So you can see that starting to happen right here. We've pulled back to the 21 moving average, and now we've got this big red engulfing candle here where it completely engulfs the body of this previous candle. And this is a very decisive candle. As you can tell, it's quite large here, right? And so essentially, this is a trade that we'd be looking to take, okay? Now, as far as where you can go ahead and put your stop losses and take profit, I'll cover that in just a second. But as you can see here, the market started to knock down right after this candle formed right here. Now, we can look for other examples here just in this downtrend. If we just continue down here, we can see that here we have, again, right here, this is a trade that we would not take, right? It's pulled back to the moving averages, but this is not technically a engulfing candle, right? It doesn't engulf the previous candle here. However, we did get an engulfing candle right here, as you can see. This candle has completely engulfed the previous candle right here. And as you can see, it's just completely knocked down after that point, okay? Now, we can see it one other time. We've pulled back again here to the moving averages, and we see that this is an engulfing candle. We have this big red candle here that's engulfed this previous candle, and pretty much immediately after it starts to knock down, okay? And you can see this happening time and time again. I highly recommend that you go and you look at this on your own time, so that way you can practice this strategy. But let's go ahead and let's talk about risk management and how this actually works, because this is going to make the strategy even more powerful. Oh yeah, and just a side note, if you'd like to get funded $100,000 worth of trading capital from a prop firm and you'd like to do it all 100% automated using a trading robot, go on over to propfarming.com and check out the free video that we put there. It'll show you exactly how we've helped hundreds and hundreds of traders become funded prop traders using a Forex robot. Okay, so now let's talk about where you should put your stop losses and your take profits. So generally when trading this, you generally want to enter right at the next candle is a great way to trade this. It's probably the simplest way to trade it. And you want to put your stop loss right above where the previous high of this candle was. So you can see the wicks are kind of right up there. And essentially what we're looking to do with our risk to reward ratio is we're looking to have at least a 1-to-1 risk to reward ratio. I don't know if you've seen our previous videos where we've talked about this, but we studied over 43 million retail trades, and we found out that traders that simply had at least a 1-to-1 risk to reward ratio were 3 times more likely to be profitable traders by the end of the year versus people that used less than a 1-to-1 risk to reward ratio. So it's really important that we're looking for at least a 1-to-1 risk to reward ratio. Now, you can also do a 1-to-2 risk to reward ratio, which obviously this would have hit as well. However, the thing with the 1-to-2 risk to reward ratio is you're going to have a less amount of wins. So you'll have a lower percentage of wins. Maybe you'll have, only 40% or 50% or something like that, which becomes tougher on your psychology. And while the mechanics of the strategy are really quite simple, the hard part about trading is the psychological aspect. So if you're losing trades more than 50% of the time, a lot of the times this can be challenging, especially if you go on a run of losing trades. So for most people, I'd say that using like a 1-to-1 risk to reward ratio is probably going to be better for their psychology versus using a higher risk to reward ratio. Even though you probably would make more money this way, you have to do what's good for your psychology. Okay, now this is a great trade that we saw set up here. So let's go and take a look at just a couple, and then I want to talk about the money management strategy, which is really, really powerful. So we did see, again, here we saw another example of a engulfing candle right here. And we could put our stop loss right above the high right here. And again, if we went for a 1-to-1 risk to reward ratio, that would put us like right here. And also a 1-to-2 risk to reward ratio would put us like right here. And, it knocked down very, very easily for us right here. And then the last one, just to make sure you guys really got this, is we saw this other example that came in right here. So again, I'm pulling out my short position tool. I could enter right here at the open of the next candle, and I could go ahead and put my stop loss above the wick here. And again, a 1-to-1 would look like right there, and a 1 to 2, which would look like something like right there. And there you saw that in a strong trending market, we had 3 really clean back-to-back winners. Now, obviously, it doesn't mean that you're going to win every trade with this strategy. However, it is very powerful on the higher time frames, and when you do get a strong trend and a pullback to the moving averages, and then you get this bearish engulfing candle. So the next thing is the money management strategy. And the money management strategy can actually make you more money than anything else that you do. And what I want to do is introduce you to a concept known as asymmetric compounding. And this has nothing to do with changing the mechanics of this trading strategy. However, just simply using this money management strategy can make you like 2 to 3 times more money than if you were to just trade a generic money management strategy. So if you want to see exactly how to do that, then make sure you check out this video that's on the screen right now, where I break down exactly how powerful this asymmetric compounding money management strategy is. Go ahead and watch that right now.